So, hello guys. I got a new setup as you can see, new microphone, new webcam. Still working on, figuring things out, but hopefully in the future the quality will go up. But as for right now, I think this will suffice. So, I know a lot of you guys probably read the title and well, maybe you're a mix of upset, maybe confused, and maybe you just don't like hearing that something that you wanted to do, say for example, being a trader, you don't like hearing someone telling you that it's probably not meant for you. So, this video today, I want to just kind of discuss why trading is probably not meant for you and it's not meant for like 99.9% of people. And the answer, as simply as I could put it, is that trading is hard. And the reason that trading is hard is because trading is the most competitive field on earth. Anyone, and I mean absolutely anyone, who has any sort of quantitative ability, meaning that, they're a PhD mathematician, a physicist, some sort of, engineer. A lot of these guys are the ones that they, will work in their respective fields. They'll go and they'll be a mathematician, they'll go and they'll be a physicist, but when they want to make a lot of money, they turn to working in a hedge fund. Now you might say, well, what does this have to do with being a retail trader? We're retail traders, we don't worry about hedge funds. And the short answer is that retail kind of doesn't exist. It's just a transitory period. If by retail you mean you're not a hedge fund manager, that you're not managing millions of dollars, then yeah, everyone at one point or other was retail. Retail in that sense doesn't actually exist. What retail is again just a transitory period of not having a lot of capital. But let's say if you're a successful trader, then you would transition to becoming a hedge fund and being an institutional player, which is why when you look at for trading, like you have to look at who is the most successful, who made it the furthest, and just gauge if that's something that you could do. And I think this is a good approach of trying to figure out trajectory when it comes to like a career path. So for example, if you want to be a trader, look at the top traders. Who are those guys? They got a lot of the time, especially nowadays. I mean, the past was a bit different, but even in the past, you had a lot of engineers, a lot of computer scientists. You had people who had long careers in finance. You had people who, a lot of the time, they would go to top universities. They were not, average people by any stretch of the imagination. A lot of these guys were you know, very, very talented and could be successful in really maybe anything. But they chose to go down the path of trading and finance because they understood that it's the one that, has the highest earning potential. If you could be a trader and you make, say, not even a lot of money, but just let's say even you make 15% a year and you can beat the market by, say 5%, nothing too crazy, but it happens. Let's say you could do that. That with given enough money and you could get investors, which if you have the right metrics, you absolutely could. You could very easily become a millionaire in just the first year or two of doing business as a hedge fund, which is why it's so hard and why I don't think it's really meant for most people because the barriers to entry for trading, for finance, especially public markets, it's very low. You just need money and a brokerage account, and you're allowed to trade pretty much anything. There's really no barriers other than you just put up the money for it, and you have access to buying it or selling it. You can buy and sell it. There's some margin requirements and things like that, but with enough money, you can meet basically all the requirements. So, given that it's a very low entry high reward, environment that anyone can really make it in if they just have the right, right statistics, they have the right strategy, they have a strategy that's winning, anyone can make it. What ends up happening is that becomes oversaturated. And because hedge funds have been so lucrative as a career path, like the average hedge fund manager, guys you probably have never even heard of make, $2 million a year on average. That's more than, think most professional jobs do and most advanced degrees make. And that's not even talking about the guys that are super successful. Finance is the number one way to become a billionaire, bar none. Like it has the most billionaires of any sort of career ever. It's just finance. So, given the low entry requirements generally and the high reward, what ends up happening is that you get guys who, at first it'll be less sophisticated, So, say like early hedge funds, you have a couple of guys, maybe they have some experience in business, they want to go and open up a hedge fund, and some of these guys make a lot of money. They do some things where it's very rudimentary. They may look at a balance sheet, do some weird balance sheet calculations, and they'll be able to tell when a business is going to boom or bust. And these guys are not, they're not dumb by any stretch of imagination. They're not unintelligent. They're very intelligent people. But comparatively to nowadays, they would be like, they wouldn't even get an internship. And as time progressed, the requirements for hedge funds and to kind of be a trader and to get it went up. So first and foremost, the big revolution was technology. So with the advent of the internet, people immediately started to use the internet to trade and to keep up with stock prices and derivatives and all that stuff. Because before, you would have to physically go to the exchange and look at what numbers that they were putting up. Things were not, digital. It took time to figure out what information was out there. So because the information was slower and you had to get things in a non-digital way, the competition was less. There was a higher barrier to entry. You had to know a guy who could go to the stock exchange to get you the quotes for the day for stock prices. But once things got digitized, now all of a sudden, some of the first adapters of technology almost always happens to be the finance space, especially traders and hedge fund managers. So with the advent of the internet, now all of a sudden it kind of democratized information. Now information isn't limited to say some guy in New York who can get it maybe even a day or two before you did, and by the time you got the prices already changed and they knew ahead of you. Now that was gone. Now everyone more or less knew what the prices were at all times. So then that brings about another question. All right, now everybody knows what the prices are. You can't compete by showing up at the exchange first, or could you? And this is the part where hedge funds now they start to compete for space near the actual exchanges because the exchanges themselves they are physical locations. You could plug yourself into these exchanges, and if you were plugged in before everyone else and you were able to send in your buy and sell signals before anyone else was, you win. So now all of a sudden, just because the information is now online available for everyone, that doesn't mean everyone got it at the same time. So now that adds another layer of complexity. Now, all of a sudden, what people have to do now is compete on speed. And this is difficult for most people because most people aren't plugged into the exchange. But the hedge funds, especially the ones who had engineers who could figure out the fastest like optic cables and all that stuff, they were the ones who were winning early on because all it took was to be 10 milliseconds or even 3 milliseconds faster than the next guy and you would make a fortune and the next guy would lose out. And with the advent of like high frequency trading and the advancement of that, now all of a sudden hedge funds they stopped looking for just people who are good at business. Now they needed people who are good at technology and math. Because before it would be you would hire someone who maybe understood an industry very well and they still do this, no doubt, but the requirements just it went up a bump. Now you don't need guys who are say railroad executives and they're great railroad executives and you hire them, you can invest in the right railroad companies and make a fortune. Now it's like everybody has access to the same information, everybody is plugged in, everybody is trying to trade against each other and everybody can hire those executives as well. So where's your advantage coming from? You could hire the right people in terms of business, but it became less business oriented because everyone has the right information and the prices slowly over time actually become more and more efficient, meaning that because you don't have disconnects in information, say everyone has the same information, that means that gap in prices it starts to diminish. So back in the day, let's say one guy didn't know what the price was, he's going to be selling it, say maybe less or more than what it's worth. And that's an inefficiency that you could capture. But now everybody has access to the same price. And apart from that, everyone has access to the same information. So take those railroad executives I mentioned before. Those guys, those knowledge would be relegated to them, and maybe they wrote some stuff on railroads. It wouldn't be available to everyone. But now with the advent of the internet again, and kind of how information started to spread around more, now all of a sudden you could have knowledge, maybe not exactly the same or as well as business executives, but you can get pretty close. And maybe you could, just yourself Google, hey, is this railroad a good one to invest in? And you can just kind of break down the business side of a railroad just from Google without having any experience in the business. So that adds another layer of difficulties because now it's not enough that you know a business and it's not enough that you're, there at the stock exchange. Now you have to be plugged in. Now you have to be using the internet to do research and have people who are great at researching as opposed to people who already have experience. Because again, experience, great, nothing wrong with it, but that information that comes along with that experience is a lot more available now than ever before. So now all of a sudden, what are you competing on? It's you gotta have to have math now. Now you have to add the math component. So if everyone is trying to find the best price, because what trading is trying to find inefficiencies, meaning you're trying to find when a price is wrong, a price is higher or lower than what it should be. So now all of a sudden everyone's trying to do this, and you might ask, well, how do you calculate the best price? You have the right information, you're plugged into the mainframe, you can enter your trades before everybody else. You have access to business knowledge that, more or less is available online, but you don't have to go to anyone, you don't have to go to a business executive for it. So how do you calculate the best price? And this is the part where it gets infinitely more complicated nowadays. Nowadays, everybody's trying to find the best price, and they're trying to use math to do this. And it comes into kind of the world of quant trading. Quant trading, especially nowadays, has exploded even more because people slowly realize that, well, if you have the same information as everybody else does, and you're kind of plugged into the mainframe again, and you're not faster than anyone else, and you don't know more than someone else who has better math skills than you, who's better at processing information than you, can beat you at trading. So now all of a sudden, all these hedge funds that were doing great in the past, they start realizing that this isn't going to hold up for the future. And there's some exceptional funds who early on they take on the quantitative route. So for example, Rentec, it started in 1980s, and they were one of the first firms that really went all the way through with quant. They almost exclusively hired scientists. They did not hire people from finance. They hired physicists and rocket engineers and you know PhD mathematicians, all those guys. Even their founder was a PhD mathematician, was a code breaker in World War II. So, and this firm was one of, if not the most successful hedge fund ever. They did 66% a year on average for about 4 decades, which is, unparalleled. That is, the greatest track record ever. And they were one of the first few quant funds. So now everybody's looking at this and they're starting to realize that, well, look, these traditional funds that aren't as quant heavy, they're starting to not look as good. So now we got to compete with Rentec. We got to compete with these quant guys, and these quant guys know it too, and they're in competition with each other as well. So now one day you don't, say for example, have very advanced computers. Early on, computers were not that great. Their RAM, whatever, was maybe at best a couple megabytes, and then it goes up and up and up. Now you have computers that have gigabytes, and maybe even some of these quant firms have terabytes of RAM just to process this. There are quant firms nowadays that are buying the next gen NVIDIA CPUs just to be able to process their information that much better, just to do like simultaneous calculations. And because the playing field progressively over time is going to get harder and harder just because the technology improves. And on top of that, let's say you have players who aren't as good as someone else, they go bankrupt. Those guys don't stick around. The guys that stick around, they're the sharks. They're the guys who will go and, they will take every dollar you have. They have no issue taking anything there is, as long as they can calculate it and they get their trades first before everybody else. They will beat you at it. So the reality is, unless you can compete with these guys, being a trader is really not for everyone. Just because progressively over time, the requirements went from be someone who is maybe in New York who can get the numbers first for everyone else to be a PhD level physicist to be able to do some of the math that's required for some of these firms. Now, of course, this isn't to say that, you can't be successful in trading without these things, but the window of potentially being able to get in has so narrowed. Like the window of potential applicants has gone from maybe out of 100,000 people, maybe 10,000, maybe even less, maybe 5,000 can make it, to down to maybe 30 people. It is that much more competitive, and it's one of these things where unless you're aware of what it takes to get there, and on top of that you have the ability to get there as well. I don't, and I'm not going to shy away from saying that I don't have the math skills needed, or the engineering, coding, whatever may have you, to be a successful trader. And that isn't to say that you can't, just because I can't do it, and that's not the mentality that I'm approaching it with. But as someone who studied finance, who did it for 4 years, I have an econ minor as well. Like I kind of studied some of the quantitative stuff when it comes to finance. Understanding kind of just the level of depth it takes to get ahead in this field, it is sobering in a lot of ways. And if a lot of you guys kind of understood what it takes, I think you would come to the same conclusion that I have, that unless you're one of these very few gifted people that is just better at processing numbers, better at calculating things, and can do it at like an Olympic level, like a math Olympic level. It is, I don't want to say a waste of time, but it's one of these things that unfortunately doesn't lead anywhere else. Trying to be a trader for years and failing, unfortunately, typically just means you're going to lose a lot of money. It doesn't mean that, you'll end up somewhere. It's not like you're trying to run a business, you fail out a few times, but you learn a lot along the way, and then you launch a successful business. And that's really the unfortunate part is you may end up losing a lot of money, and there's a lot of scams and things like that that go along where they will just lie to people and they don't want to be honest about it because either A, they don't know what the requirements are, or B, they know but they just want to lie for money. And being cognizant of those things, and it's is important. I'm not sitting here to say that you shouldn't trade, and I'm not sitting here to say that I'm not going to share as much knowledge as I know about trading and finance to potentially even help people. But I don't feel comfortable sitting here and being dishonest and saying that this is a realistic goal. This is a goal that is meant for a few people. It'd be like someone sitting here and saying, oh yeah, you guys just work hard enough in politics and you can become US president. Well, it's not really that realistic. Now, of course, you're more likely to succeed as a trader than become US president, but the odds are much better, for being brutally honest. The amount of people who can be successful traders are like very rare. If you're a successful trader, the odds are you may become a billionaire. And you have significantly good odds of becoming a billionaire if you're a successful trader. A lot of billionaires are. So it's kind of like that. Just look at the amount of billionaires and people who have, say, like, over $100 million. Not a lot of people in America. It's about less than, I think, 10,000 people that have that kind of money. Less than 10,000 that got it from trading regardless. And you might say, well, that's 100 million, that's $1 billion. I'm not trying to do that. I only want to make, maybe 100,000, maybe a couple mil. I don't care about making 100 or $1 billion, hundreds of millions. But the issue with trading is if you're good enough to be a successful trader, because the markets, a lot of the liquidity is almost limitless, meaning that you could stick in, say, a futures market. You guys do futures trading a lot of the time. Let's say you find some strategy in futures that works with NQ or ES, because the liquidity is so high, you could stick in $1 billion into your strategy and say make, let's say in a year you get 10%, right? Alpha on top of it. You get 10% alpha. 10% alpha on $1 billion would be 100 million, for example. And there's firms that do that. And because these markets are so liquid, if you're going to be a successful trader, you can absolutely do that. And you should do that. You should strive to get investors and have your own fund. Because if you are a successful trader, there's plenty of people who will give you the money to do that. But of course, it's just the requirements are so high and there's so many pitfalls to it. The last thing that I would want this to be, again, misrepresenting what trading is and to make it out like it's a realistic goal. It's not a realistic goal, and that's okay. And this isn't meant to say that people's dreams of being a trader is a bad thing. It's not a bad thing, and I'm not even going to go as far as saying that you shouldn't trade. You can trade and you can experiment with it, but please just be aware of what you're going up against and understand that even if you fail, it's not really your fault. It's too competitive. You have guys who are pouring more into it than you are, that are just simply put, they're born in different ways. They're born in ways that they can understand the skills that takes to become a sales trader just better than you can. And that's not your fault. It's not your fault that, Einstein is probably smarter than you. It just so happens, some people are born with exceptionally high IQs or great analytic skills. And I'm not here to discourage anybody, but it's kind of like sitting here and saying, yeah, not everyone can be like as smart as Einstein. And with the way that trading goes, you have to dedicate so much of your life to it. I don't feel comfortable, again, lying to people and selling, hopes and dreams. I think that's one of the biggest markets around this trading stuff is just hopes and dreams. And it's not your fault for failing. And if you do experience success, I hope you keep it. And I wish everyone could be successful at this, but simply put, that's just not how this environment is. It's a zero sum game. Someone has to lose for you to make money. And eventually, what ends up happening is you end up in a room full of sharks who don't lose money and they'll take your money. And that's what you want to avoid. So please keep in mind, like, rife with scams, rife with lies, rife with, very predatory people too. Just apart from a lot of these financial institutions and hedge funds, which are very predatory towards retail in a lot of ways, also keep in mind that a lot of the people who are pitching you like these courses and products are also very predatory as well. And just let this serve as guidance that if you decide to do this thing, to go down this path, don't let it consume you. Don't let this idea that if I fail at this thing, that there's something wrong with me. There's nothing wrong with failing at this. This is not meant for everyone. If anything, it's meant for as few people as something could be. It's like, being an astronaut, only a handful of people will ever make it. And that's not your fault for wanting to be an astronaut and failing. It's just limited. And on top of that, please know that I will make more videos talking about the nuances of trading and finance. This is not for me to just sit here and say, don't do it, or you guys can't do it, or you guys are going to fail. It's not what this is. This is just telling you guys what you're up against, why for a lot of people it's not the best choice to do, and what you want to avoid. It's just as guidance. I will 100% be sharing even more information about trading and what it takes to be successful at it and what a successful trader would look like and kind of the strategies that go into it and the theory behind it. I have absolutely no issue sharing that, and I will. So please follow and stay tuned for more if that interests you, but just be mindful. This video is not to discourage people. It's just to kind of wake people up to what they're facing. Thank you guys, and I hope you enjoyed.